So it takes care of the TCPL online sales, not the CPL, because CPL only supplies to TCPL. These are the facts. So, and as a result, since the sales are identifiable, all these sales happens through the platform developed. 2% of the online sales is to be given as a lead generation fee to the 24/7 division. So these are the facts. I would like to go into the important aspects, the roles of the SBUs. I call them as strategic business units. One is pharmacy division, which is strategic business unit 1. Second is the strategic business unit 2, which is the 24/7 division. The points which merits attention. All the points, whatever I've told, this has been written here. The role of corporate office. See, the company is headquartered at Bombay. It has 2 registration. One is ISD registration, other one is normal registration. Now, what is the role of corporate office? The corporate office is a place where these KMPs are located. All these strategic decisions, where to locate these manufacturing units, what price they have to fix for it, and CSR activities, conduct of board meetings. It's basically a treasury office where the finance is basically managed there and important decisions are being taken from there. So these are all the facts. And in the month of March 24, you have been appointed as a new consultant. Till now, they are operating with their old consultants. This is what the expenses that are incurred in the month of March 24. The amounts are in lakhs. 11 types of expenses I have taken, which has been incurred at corporate office. Now, one by one, let us go into it. Internal audit fee for all the registrations of CPL, Confused Private Limited, which means it has one Bombay registration, that is the corporate office, and 4 different strategic manufacturing units at 4 different places, and one centralized 24/7 division, which is promoting the online sales for the holding company. Totally 4 plus 1 plus corporate office, 6 registrations are there. Normal registration and 1 ISD registration. Totally 7 registrations are there. 4 pharma division, 1 24/7 division, 1 corporate office. The other one is ISD registration. These are all the facts. And TCPL holding company has 21 registrations across India. Now, internal audit fee for all registrations of CPL, it is 2.25 lakhs. IGST, ITC is there. I have not taken these taxable values. I have directly dealt with the ITCs alone. Director sitting fee is there, 0.75 lakhs. Rental charges at corporate office is 2.65 lakhs. Sorry, it is 2.65. There is a small typo error. You can make it to 2.65. Security charges at corporate office, 0.1 lakhs. Import of secret formulas and patents, 365.75 lakhs. Bank charges, which is for the central treasury, that is there. For all branch offices, it is common, 0.75 lakhs, 0.75 lakhs. SAP software license used by all branches, 5 lakhs and 5 lakhs. Monthly retainers for social media marketing, branding the products and customer support online, which is they are categorizing this as a business support expense, 3 lakhs and 3 lakhs is incurred. Professional consultancy charges, legal charges, RCM cross charge from the legal normal GSTN of the corporate office to the ISD GSTN, 80 lakhs. Group life insurance for all employees, 10 lakhs and 10 lakhs is there. And this is the total that is there. And corporate office has an ISD registration in addition to normal registration. Now let us go one by one these expenses and try to analyze the issues that are there. ITC of SAP software license was not reflected in Form GSTR 6A. The point, how I have phased out this case study, I'm going to discuss the compliance issues that are there. Then I have move on to discuss the litigation issues that are creeping up. So this is what I have branched out. Now let us take the first compliance issue. ITC of SAP software license was not reflected in Form GSTR 6A. This 6A is basically like how 2A operates. 6A is a communication document for ISD registration. Once you give the ISD registration to the vendors will have to report in that registration so that it gets reflected in 6A. This vendor, because of some failed to update their GST masters, it has been reported in normal registration in form GSTR2A, it is getting reflected. Now the issue is, should I have to match with form GSTR6A to proceed to take the ISD, for that is to arrive at the ITC available for distribution? How this complaints process works out, let me brief a little bit before entering to this particular aspect. First, we'll take the input data, match it with the GL ledger, and as a practice, we try to match it with 6A. Then after matching with 6A, we'll arrive at the ITC available for distribution. After arriving at the ITC available for distribution, you'll also add the previous month's ISD invoices which are there, but not reflected in 6A, but it is getting reflected in this month. That will also be added, and we'll arrive at the ITC available for distribution. Then take up the respective branches turnover ratio, arrive at it, and do the distribution. This is the broad process or the framework how the distribution happens. Here the catch is it is not reflected in 6A. I will go on to say further, the company has the practice of matching it with form 6A. Now this credit is not reflected. You are the new consultant. Let us say we are all the new consultants. Is matching with 6A a requisite on a legal standpoint? This is my question to you all. Is matching with 6A required?
That is what the department is saying, that, you have to give us a proof of the, screenshot of 6A that it is there.
There.
So,
understood, sir.
Yeah.
But on a legal note, is the matching required?
In the law, there is no mention about this.
Yes. There is only rule 65 which is there. It says based on the data that is available in 6A, as well as you can make some additions and deletions or modification. That is what the language that is employed in rule 65. So in my humble view, matching is not required. But on a conservative note, as what Arup sir said, being the consultant of the company, no, there is no, unless and until the credit volumes, it is so substantial that it warrants to take the credit in that particular month. But for it, it is safer to go with a conservative approach to avoid litigation. After all, litigations are meant to arrive at the solution. So let us go for a solution-based approach. Matching with 6A is it's a better way to do it. That is what, in my personal view, I will recommend. Thank you, sir. ITC of rental expenses.
Hi, just one point here on this SAP software license expenditure. So I don't recollect the rule, but there is one provision which allows you to transfer, say, in our case, the invoice has been wrongly billed to normal registration as compared to ISD registration. Then from normal registration, I can issue one invoice, a memoranda invoice, to transfer this credit from normal registration to ISD registration, and from there we can do the distribution. But
Wonderful.
the only challenge,
Wonderful.
only challenge is that if I reflect that memoranda invoice in GSTR1, it is not my outward supply, and in 3B there should not be any liability. Okay, so there will be mismatch between 1 and 3B. So again, that is a practical challenge how to go about it, but that also is an option where I can transfer the credit from normal registration to ISD registration.
Yes. Sir, to answer this question, I think the rule is Rule 54, Sub-Rule 1A, and it has been inserted with effect from 23/1/18. And yes, as you rightly mentioned, the rule allows to do a cross charge. In colloquial terms, I say it is a cross charge where you are allowed to do a tax invoice from, provided it is of the same, both the registrations are in the same state and it is belonging to the same PAN. And as you rightly mentioned, the option is to raise one tax invoice from here to there and do a cross charge from normal to ISD registration to distribute the credit. Now, another interesting issue as what you have raised. So before getting into the aspect, should I have to treat it as a supply and report it in GSTR1? because you went on, I think, you went on to discuss about mismatch that is there, right?
Yeah,
Correct, sir?
ideally it is not an outward supply, but it should not come in GSTR 1. But the point is then how it will come in 6A, that was the issue. So we were at a particular point thinking that if I report it in 1 and then it will at least go in 6A with that. But this issue of 1 versus 3B and now the law getting amended and automatic notices coming for differences, that again will be a challenge. So whichever we go, there is a practical lacuna and there is no clear guidelines to address such kind of situations.
Yes. Sir,
No, but
personally,
Amitji, in 3B, are you not utilizing the credit then? The credit which is charged to, which is given to the normal registration?
Then I will not take the credit, no. At least now when the ISD things are becoming mandatory,
Yes.
where I have to distribute the credit. So I will not ideally avail the ITC in my normal registration and I will directly transfer it through GSTR 1. Maybe then I'll have to explain to the officer that why I have done so in absence of any clear-cut procedure to address such practical scenarios. Firstly, I will go to the vendor and ask him to reverse the invoice. But
Yeah, that's what you
at times this becomes difficult for many clients to go back to the vendors and get the revised invoices done, especially when they have not done the
Yeah,
PO
especially
correctly.
the invoice of permits. Yeah.
Yeah.
Hello, Ashwin.
yes, sir.
Yeah. Like I just wanted to know why is why is matching not compulsory for an input service distributor, that an invoice should come in 6A only, then you can take credit?
Matching is not, because nowhere it is mandated that I have to match the credit. Then only I can go on to take the credit. Is there any requirement in, as far as whatever I've read, based on section 20 and read with
So
all
if they
the,
come to 16 to AA, like
yes,
even input service distributor is a registered person. So for a credit to be distributed, first it has to be availed, right?
correct, sir.
So if there is a requirement in 16 to AA that a registered person, an invoice should appear, the invoice which is given to a recipient should be communicated to him.
Yes,
then
sir.
without that appearing in 6A, can there be an availment, and without availment, can there be distribution?
Wonderful. Sir, in my view, this the whole purpose of input service distributor, the concept is being enabled in the law to distribute the ITC basically. So availment is a different aspect, distribution is a different aspect. And 16.2A, I would go on to say that is what I personally can. Maybe I might stand corrected based on the other learned people's opinion also. This 16.2A is narrower in its scope. It seeks to cover only those FCM invoices, in the sense where I report the normal outward supply. The ostensible purpose of reporting this credit, the 6A, is to ensure that distribution is correct. That is the idea behind 6A. Whereas when it comes to 2A or 2B, the concept is going to be different. The government wants to ensure that there is one parallel condition, 16.2A, which is there for availment. Whereas for distribution, nowhere it has been mandated that I have to make sure it is getting reflected in 6A. The point is, availment, this condition applies. For distribution, this condition will not apply. That is what I personally view.
Okay.
See, this,
Why I had a different thought is, because here it is not a distribution of tax paid on inward supplies. Here it is distribution of input tax credit. If we come to section 20, it is distribution of input tax credit. So unless you satisfy section 16, can a tax which is paid on inward supply be called as an input tax credit?
Correct, sir. See, when it comes to availment, availment would have happened in the normal registration only on satisfying the 16.2A. But when it comes to distribution, you don't find a parallel condition there. So availment implies the fact the normal registration from where the distribution is going to happen, or the normal registration from where the availment has happened, 16.2A will apply. But when it comes to distribution, which is a different concept, which circumscribes the fact that I've availed the credit only on satisfying the 16(2)(a). Then in such scenario, or I would put it in this way: distribution happens post the availment. An availment has to satisfy. For availing the credit, 16(2)(a) has to be complied. For distributing the credit, there is no requirement to match it.
Okay.
Yes, sir.
Like, but as you said, that distribution will happen post availment.
Correct. Yes, sir.
Okay, fine.
Now, getting into the yes, sir. Raghunathan, sir, you want to say?
Yeah, yes. See, basically, this is GST is a procedure-based law. Any deviation in procedure will be viewed negatively by the regulators. Okay, so we have to keep following it. And if you say 6A is not getting populated by this credit, then it should first happen, because otherwise, how will I be able to take credit on that and then distribute it? And then there cannot be cross charge of this, because cross charge also looks at some service provision by the central authority to the other things. So in the
Correct.
case of software license, it's only sharing of expenses possibly. So there is a third party involvement. So cross charge also cannot happen in this case. This is my opinion.
Yes. Yes, sir. Cross charge, let us come, because Circular 199 has given any third party service, a leverage has been given right now based on the Circular 199. How far it stands correct in terms of footing of law, that is something, but it gives a relief temporarily, because Finance Act 24 has made the amendment as well. Yes, I find two questions coming in chat box. Ineligible credits have to be lapsed in the recipient state. Else states will have IGST settlement. ISD has to separate eligible. Yes, sir. Venugopal, sir. Segregate eligible and then distribute. Yes, sir. Agreed, sir. Yes, wonderful. Now, coming into the next aspect, ITC of rental expenses, group life insurance policy. This is the point I think Venu sir was trying to address. ITC of rental expenses, group life insurance policy pertaining to corporate office was distributed across all the registrations, other than that of the corporate office as IGST credit, and for corporate office normal registration. For corporate office, it was distributed as, yes, for normal registration, it was distributed as CGST and SGST credit. This is what it has been done. There is a point here, even for corporate office, they are doing a distribution, although there is no outward supply. So there are 2 points. The point which I want to drive home, ITC on rental expense. See, this renting of immovable property is pertaining to that particular corporate office. And group life insurance policy, let us discuss the second aspect later. I want to discuss about the rental expenses. ITC on renting of immovable property, which is pertaining to that particular corporate office, can it be distributed to all other branches? That is my question, friends.
To my mind, it shouldn't be distributed because it is not something which those branches have availed the service. It is the corporate office using for internally generated services and can be part of cross charge mechanism instead of ISD mechanism.
Understood. So is there anyone to say no, it can be distributed using the ISD mechanism as well? Why I'm posing this question? Is there any requirement that the branch has to receive the services for distribution, for doing the distribution through ISD mechanism? The answer is yes, the branch has to receive the services. Unless the services are received, it is not possible to distribute it. So, in my view, what Amit ji said, I would also subscribe to it. To distribute, ISD would not be the ideal route. Maybe you can resort to cross charge. And distribution has to happen eligible and ineligible separate. Now, this group life insurance policy pertaining to corporate office was distributed across all registrations. including to corporate office. Now, the point which I want to drive home, when they are distributing, they're distributing it as an employee benefit expense. That is the nomenclature they gave. And they are taking the credit because what is the standpoint of the recipient when I get, it is through the ISD mechanism, what I get is an IGST credit now for the other branches. So therefore, I'm entitled to take this credit. Can an organization devise a strategy, or can they claim and say this is an IGST credit? When it gets the distribution, its color changes, its character changes, and therefore I can take the credit. See, this is basically an ineligible credit under section 17(5). It's a blocked credit that is being distributed, but it is distributed under the guise of employee benefit expense. And the branch, when it is what I have paid is CGST and SGST. When I'm distributing to other branch, it is IGST, and they are proceeding to take the credit. Is it correct or?
No, I think Ashwinji, as something is which is inherently blocked,
Yes.
that cannot be availed and even transferred. So that is the inherent principle.
Yes. And also one more question which I want to ask. The ineligible credit, what if it is not distributed, sir? Is there any ramifications? See, the corporates are having this practice of not distributing, as far as whatever I've come across. They only distribute the eligible credits. They don't distribute the ineligible credits. Whereas, as what Venuji rightly pointed out, even the eligible and ineligible ought to be segregated, then distribution has to happen. See, the worksheet will go like this. Expense-wise, you have to do. Then filter eligible and ineligible. Ineligible to a separate distribution. Eligible, a separate distribution to religiously comply with the rule. But the point is, many corporates are not doing it. Will it have any ramifications?
Hi, Ashwinji, this is Sanket here. I think
Yes.
the intent of transferring the ineligible is that, again, we are talking about GST, which is consumption-based tax. And that's why, since that, even though it is ineligible, it is getting consumed in a particular state. And that's why distribution should be done. I think that is the logic and intent behind everything needs to be distributed, whether it is eligible or ineligible.
So what if I don't distribute?
So if you don't distribute a particular ineligible credit, based on consumption-based logic, it will not go and sit into a particular state where it is consumed. And then the revenue of that particular state to that extent gets reduced.
No.
That is the whole challenge.
Yes. That is the reason. So if I don't, despite knowing this fact, the companies are not distributing, what course of action the department can come and take? Will it have any bearing on the taxpayers?
I think it may attract a general penalty for violating the provisions of the law. As such, I have not availed any ITC, so there cannot be any demand. But there could be penal consequences.
Yeah, Nileshji, I don't think general penalty will hit because 122(1) uses the word irregularly distributed. So even wrong distribution can be treated as irregular distribution. So specific penalty under 122 will come. Only thing is there is no quantification mechanism possible unless we go into the facts. So what could be the irregular distribution will be only subject to the part which is not distributed.
So to start off, like we are currently getting advisories saying that there is a difference between 2B credit versus what you have taken in 3B for 22-23. We might start seeing advisories saying that all credits in ISD are not transferred, and that's why you need to transfer so that the state gets a proper credit. That could be the way forward for department to start off, I think.
Yes, sir. Yes, distribution of ineligible credit as per the law, going by the text of the law, is warranted. And it is better to do as what rightly pointed out, the ramifications going to be on the state. That is, the state revenue is going to get affected unless you are going to account it properly. So this is going to be but when it comes to taxpayers angle, probably the penal consequences might be attractive, but subject to what? As what Uniji said, whether it is to be called as an irregularly distributed, non-distribution, will it amount to any irregularly availed credit? Certainly no. I don't see even the penal consequences should be visited. But for what 125, what it says, where no penalty has been specifically envisaged in the law, then probably a general penalty can be imposed. That is also subject to 126. So this is what I personally perceive. Security charges from ABC Limited pertaining to corporate office was distributed across all branches. It is security charges from a company. It is not from for the security services. These security charges are given. It was distributed across all branches. Is it right to distribute across all branches the security charges which is pertaining to corporate office? Another question with Venuji has raised, whether ineligible credit distributed as eligible, where penalty would be only be on the ISD or the recipient state GST and also. That is the question that has come, friends. Penalty would be only on the ISD or recipient state also. Takes or distributes credit.
Penalty will be on a recipient state, not on the.
Yeah, ideally it should be on the recipient state.
Yes, sir.
Because
Here,
their state is a state which is not getting the tax actually. If it is not distributed.
correct, sir.
No, but why it can't be on the ISD registration? Because the violation has been done by the ISD.
It will be on both actually. But it will be also on the recipient state also.
No, if we are deemingly assuming that these are two independent registrations, so they have their own status. So I can't question the eligibility at the recipient's end, typically how it has been held in the past as well. So if as a recipient I have received an invoice, I can't challenge that. It has to be challenged at the source. And if the source has made a mistake, then penalty should be only on the source rather than at the recipient's end.
No, but yeah, that is right. But if you see from another angle that, as Sanket ji has rightly mentioned, that the consumption state, they are not getting the tax because the main purpose of blocking the credit is that where in the end the cycle is ending, there the credit should be absorbed by that particular state. It should be available to that particular state. So in that case, even the receiving state, their officers can also say that, this state has not got the tax because of the non-distribution of the ineligible credit.
Arupji,
But,
not
Arupji,
getting
I won't
tax is an
agree with
impact
that.
of the offense, or is it the offense itself? Because the penalty has to be levied at the point of offense, isn't it? The impact of the offense may be that the state is not getting the credit.
Correct. So the
Right.
recipient state assessing officer has no clue about the whereabouts of the credits. It's a single line which is distributed as either eligible or ineligible. So
Right.
assessing officer in the recipient state doesn't even know whether it is insurance for employees or in general insurance for the organization. They wouldn't have any clue.
Sir, they don't have jurisdiction, so why should they bother?
Absolutely. So the penalty to the recipient state, I have my own doubts.
Yes, sir. Sir, Uniji has raised one more question on 122.19. But it will just more specific is what the Uniji has taken a stance. But don't you think, Uniji, the languages takes or distributes? See, I have done, I have not distributed any credit in contravention of section 20. What I have done, only the ineligible credit I have not distributed. Whether this 122.19 will it be triggered here? Because I have not distributed any input tax credit. See, if I distribute a credit which is ineligible, but I distribute as an eligible credit, then
My question
probably.
I understand. I'm taking a new angle to it since we are in this discussion. My question is, an ISD is only supposed to distribute in totality. Any
Yes.
methodology in which they did not distribute is distribute not in accordance with 20.
ISD has to distribute the credit in totality.
Section 20 and 21 are self-contained codes in which they are supposed to distribute the common ITC in so and such fashion. So distribution in contravention means anything not contemplated in 20 or 21 which has been tweaked by the ISD. So can I apply 122.19 as a more specific penalty than 125 is the question.
But penalty provisions are to be strictly read. That is what I understand. But when you read 122.19, the language is only takes or distributes the input tax credit. So by not distributing an ineligible credit, is there any ramification cost? Nothing. And whether non-distribution of credit will amount to distributing the credit in contravention of Section 20?
Ashwin, it does not say that distribute in excess. It says distribution in contravention.
Contravention, correct.
It is not excess, only that excess, distribution will lead to, 122.19. So you cannot say that only where it is excess distributed, it will be attracted. Even,
Ashwin, I'll add on one more thing. I won't
Yes.
levy the penalty on the tax not distributed. I will say the second limb falls and the penalty will be 10,000. So 10,000, 10,000.
Sir, when there are, when law, and also this point, because the penalty, as what you rightly mentioned, it is on the tax amount or the irregularly availed ITC or 10,000 rupees. The point is, if there are no two comparables, when a law says to take two factors to be factored into account, then determine a penalty where I don't have one of the factor to it. Technically, if that so be the case, then can I go for 10,000 rupees penalty?
The Allahabad High Court and Matinere Limited as well as Clear Security recently has said wherever there is no tax evasion, the second limb falls and the applicable upper cap of 10K can be made applicable. So it appears that up till 122, 110 is subject to both, and 122
Sir,
take a stance that 122.1 doesn't need to fail because it is easier to.
Unnisi, if I remember right, that judgment itself classifies the offense into two categories, no? The certain offenses
Yes,
were only
table A and table B.
Table B, yeah, correct.
Oh, wonderful.
See, one thing.
Putting a thought, even I
Yes,
was
sir,
on
yes,
the
sir.
assumption that it is a general penalty,
Yes.
but since you are focusing the issue on 125 and ineligible credit, I was just putting on an
Yes, sir.
additional thought.
Yes.
I'm not sure whether this view is correct.
See, one thing is, according to me, whether the in ISD registered person is having a passive role, like a post office, he has to just transfer it, or he has an active role in determining the credit availability, because the wordings are takes or distributes. So takes come first, whether availing the input credit. So it should be an eligible credit which he has to avail. So the balance he can only distribute what is eligible to the other branches. He cannot distribute what is not eligible at this point itself. So only after taking the correct credit, eligible credit only, it can be distributed. So there's no question of loss to the other states and all that. That comes as a secondary thing overall. At the receiving end, what is taxable or not taxable? First of all, the ISD has to have a very active role in seeing what is eligible credit, what is ineligible credit, and distribute what is only eligible. And again, the word when he wrongly distributes means what need not be, the services is not availed by the branch, let us say. If he is going to distribute a credit to that branch also, then it amounts to a wrong distribution. So wrong distribution has one limb. First of all, take eligible credit and distribute it, because the act also says that wherever a branch is directly involved, you have to distribute it only to that branch or not to the other branches. So an active role for the ISD registrar is there, and accordingly you should act. So the penalty and all comes later, but at the initial stage itself, there should be filtering happening at ISD point. This is my view.
Yes, sir.
And another view that I think is that if the ISD is not distributing the ineligible credit, how is the state in which the ISD is based, they are being prejudiced? So why will the officer get affected, because of non-distribution of the eligible credit?
I beg to differ with the view. ISD has to don't do anything. ISD will receive the invoice, he has to distribute. while mentioning invoice, he has to mention whether it is means what is the nature of the services which are going to distribute. So ISD cannot keep it in their own account. For sake of example, 1,000 rupees invoice has been raised and it is ineligible credit. Irrespective of the fact, it has to transfer the 1,000 rupees. So there will not be nil balance in the ISD. So that's my view.
No, that's
Yes.
right. But we are saying if it is not done, then what could be the impact? If the ISD prefers not to transfer the ineligible credit of the life insurance, then how is the state in which the ISD is based, how are they getting affected?
Arupji,
Yes, sir.
in connection with on this, is it the amount of ITC to that extent of the IGST that gets reversed? To that extent, the state will get its compensation in connection with it's a fair reversal that is happening. Now, today we have a specific advisory where the state governments insist upon that you have to take the entire credit and reverse it. Gone are those days, you only claim the
Right.
eligible credit. Setting in that context, will the ISD need not distribute the entire credit, or it should be like what comes in should go out? That becomes important because more on the IGST revenue sharing part from the respective state government standpoint perspective.
Yeah, that is one angle. That is there. If they have made it compulsory in 3B, so there also it becomes imperative.
Arupji, assuming that it is in the receiving state that penalty has to be invoked, which provision will they invoke?
They'll go for general penalty in that case, saying that, whatever ITC was to be, reversed in this particular state, that is not reversed. But again, what Undiji said, that is again very important, which actually they are facing a problem, because in one of my matters, this issue is already raised. But the problem is with quantification. Because the officer is not aware as to what are the ITCs, that is not, because that's why he's asked for the entire 6 of the ISD, what they have got credit, what the credit they have got, what they have distributed. They've asked for all the details. Because
But are we liable to give the details? Does he have the jurisdiction to ask?
No, that's what we have said, that you don't have the jurisdiction. We have not given the data.
Asked in the the forthcoming paras. I also asked the same question, whether the other GSTNs have the jurisdiction.
Yeah. Ashwini, we can move forward. Yeah, because 944.
Yes, sir.
Sorry.
When it comes to the security charges, which is also pertaining to the same to that particular corporate office, whether it can be distributed to all branches, the answer would be no. But what is the impact of such distribution? Someone has mentioned about section 21, the chat box. And I would also like to go with Raman's view on there is no fault of recipient. Why should the recipient be penalized? That is what I subscribe to that view. Only the ISD should be penalized, if at all. And I am of the constant view that 122.1 should not apply. Anyways, there is a split view here. But that is what I personally canvass. 122.1.9 should not be applied, and recipient should not be at no fault of recipient. Recipient should be penalized. And section 21, someone has mentioned about section 21, where I'm not supposed to distribute this credit to all branches. I've done the distribution. So as per section 21, now the recovery has to happen here. So that is what the point number 3 highlights. Even for the ITC of rental expense, whatever it has been distributed through ISD route. Will there be any ramifications? Now you have done the distribution across all branches. Now the interesting point is circular 199. For these two things is circular 199. It gives me an option now to distribute. The question is, if I am not distributed as ISD, certainly I would have factored, because what is the view this company is taking? Let us say the company, what view it is taking. The very existential purpose of the head office or the corporate office is to facilitate the service of all other branches. And I am not indulged in any of the outward supplies. If that so be the case, what service I provide is a holistic business support service. I lend my brand to all other, to all other branches. and I take care of all the finances of all the other branches. In overall, I provide some support services to them. If that so be the case, what I have not done through ISD, anyways, I would have done through cross charge. So, and Circular 199 gives a leverage for those third-party services, whatever I've received. I'm at an option to choose ISD and cross charge, but I have done the distribution through ISD. Will it have any ramification? Because the security charges, whatever that is paid to the ABC Limited by the company, it is pertaining to the corporate office. So my question is here, the distribution has happened through ISD, but there is no receipt of the services by other branches. But since the option is given, can I exercise this option and say Circular 199 as the protection for?
I think for the earlier period when ISD mechanism was not mandatory, we can go with what view you are saying that otherwise also I would have done cross charge, and in that sense it's revenue neutral.
Okay, perfect.
So, but from the day ISD has become mandatory, one can say that the services were never received by the branches. So the distribution itself was illegal. And the department can initiate recovery at the ISD registration site. And once that becomes illegal, the recipient's ITC also becomes illegal, and it may end up reversing that. So I think post ISD getting mandatory, this kind of distribution which branches have never received the service could be a challenge. Rather, we should club it in cross charge. And we can't take that revenue neutrality argument after this amendment, to my mind.
Yes, sir. Wonderful. Even I subscribe to what Amit ji said. 2 Clause 61 is amended by the Finance Act 24, which is yet to be notified. And liability is casted to distribute those credits which are received through or by way of a tax invoice. So if that so be the case, post the amendment, I foresee this practice as a challenge. But whatever they have done so far or till date, probably they can take the shelter of the Circular 199 and come out of it. That is what even I would like to canvass. Bank charges pertaining to financial year 22-23. It is reflected in 24 GSTR 6A, was accounted in ISD books finally, and distributed across all registrations. Here I've been following up with the bank, and bank charges finally they have correctly reported in 6A. It is pertaining to 22-23. Now I am distributing the credit. What challenge I foresee? Whether this distribution will be impacted by section 16(4. That is one question. And what I am distributing is technically a time barred credit. So it is an ineligible credit that is being distributed. That is the second question which is there. Is distribution has any time limit in the law? First question. And second question, what I am distributing is a time barred credit as per 16(4. So the point is, the available for distribution, should I have to take this credit, 16(4 applies for it and then do the distribution, or the 16(4 will not apply for even for to determine the ITC available for distribution, and therefore I can proceed to distribute. That is the question, yes. In my humble view, to say there is no time limit is what I understand for distribution of ISD credits. And with regard to this ITC available for distribution, to factor what are the ITCs that should be there, both eligible and ineligible has to be factored into it. Should I have to categorize this as an ineligible credit just because it is barred by section 16(4? There are two views which one can canvass. One is invoice. The language of 16(4 is nuanced. It uses the expression invoice for supply of goods or the debit notes. That is the language that is there. If invoice for supply of goods is given a narrower meaning, which means only those forward charges invoices are covered, not the ISD invoices which are covered, then the distribution which is happening through ISD invoice to the recipient will not be barred by section 16.4. Therefore, for the recipient, from the recipient's end, they can proceed to take the credit. If the invoice for supply of goods is interpreted to include even the ISD invoice, then 16.4 applies even to the recipient's end, and credit is barred. So the point is how to understand invoice for supply of goods. In my view, I subscribe to the point 1. Invoice for supply of goods, I give a narrower meaning. I give only those in colloquial term to say only the FCM invoice, even not the RCM invoice. 31(3) of invoice is different from invoice issued by the supplier. I understand the term invoice for supply of goods or services, only invoice issued by the supplier, not the RCM invoice that you raised. So I've been constantly canvassing a view, even for the RCM credit 16.4 will not apply. If that so be the case, this ISD invoice, which is different because Rule 36 sub Rule 1 comes up with 5 different invoices. Invoice issued by supplier is one thing, and self-invoice raised in accordance with 31(3) of is another thing, and ISD invoice is another thing. I understand invoice for supply of goods. When you read along with Rule 36 sub Rule 1, it covers the category A invoice and the debit note category C invoice, 36(1)A and 36(1)C. 36(1)B, D, E is not covered. So 16.4 will not apply is what the view I canvass. Anyone has any other view can also say yes. What is the fate of this? 2 questions are that distribution is impacted by any time limit. Second question is, for the recipient sense, is the credit can be denied based on 16.
No, I would like to say that if you read the IGST provisions of settlement along with this, even if you literally say invoice is not covered as ISD invoice and 16.4 doesn't apply, isn't the whole purpose of 17.1 and 17.2 to specify a time limit within which the balance integrated tax gets finally settled between the center and the states? And if you further allocate an IGST component after a specified time, like the annual return date, it will mess up the settlement calculation. So should we read 2021 in isolation, or should we link it to the settlement provisions and say, yes, even if you say it is not an invoice, it has to apply to the general principles of settlement, and it has to be within the period of time in which the settlement is not affected?
Yes, sir. Sir, the question is addressed to me or to everyone, sir?
No, this is the general point that I wish to convey. You can add your views, others members can also chip in.
Yes,
So
sir.
can we be too literal?
No, but settlement, I think we need not worry about it because there are IGST demands raised even much after those settlements at the time of audit or assessment and other things. So we have to only look at the provisions of the Act as applicable to us and not between the center and the state settlement and all that. This is my humble view.
Just one point.
Yes.
That if the credit at source itself is ineligible, 16.4 otherwise would have applied. Because I've received something in 6A, which is already time barred, then I should not distribute, because then what I'm distributing is not a credit. It is already barred, it is ineligible. So even if it goes distributed, it will go under ineligible category. It cannot be availed at the recipient end. And even if it is availed, on the analogy that recipient cannot be questioned for what is being given, the way we discussed that recovery can happen at the ISD end, then again we will land up in the problem.
Yes, sir.
And what cannot be done directly cannot be done indirectly. So 16.4 is a eligibility criteria which cannot be circumvented by an even ISD registration.
Yes. Sir, one more point. If that so be the case, going with your view, even for the ITC on rental expense, I foresee a challenge. As you rightly pointed out, the place of supply issues are there, where the immovable property, it is the place of supply is that particular state. If that so be the case, when I'm going to distribute the credit, basically this credit is an ineligible credit going by the, if you read the 16.1, if you understand the term registered person concerned to that particular state, if that so be the case, then in such case, even this credit which is ineligible, can it be distributed under the guise of IGST? See, for on the note that we agree to cross charge and ISD, both will have the same effect, revenue neutral effect. If that so be the case, even for the rental expense, you have this ineligibility challenge because the place of supply is in one state, whereas the recipient is registered in another state.
No, but rental will be part of the cross-charge mechanism, right?
If that, no, I distribute using ISD, we are going to, on the note that we reconcile that ISD or cross-charge, both are going to have a revenue neutral impact. I have done this through ISD. Then in such case, whether this credit will become still, the validity of credit, will it be questioned? Yes. Understood,
I think distribution can happen as IGST credit only, right? Not as CGST, SGST.
Correct, sir. Distribution will happen as IGST.
The moment I've distributed as IGST, credit should be available to my mind. But
Yes.
From the day ISD mechanism will become mandatory, then I have to bundle it as a part of cross-charge, the central rent. And then it is a support service or internally generated service, and it loses its individual characteristic of a rent. So
Correct.
In that case, I think it can be made part of cross-charge mechanism.
Yes, sir. As you rightly said, ideally doing cross-charge is correct. Again, I repeat. But if at all, if it is done through ISD, I foresee one more challenge that I'm not registered. I'm registered in a different state. But what is distributed is a credit of a different state, which I am not entitled to take, although it is being distributed as an IGST. As what you source, what you rightly said, from when my availment itself is not correct, how can it distribute the credit? So that is the aspect which I want to discuss even for the rent. As per the last area, as per the existing practice for import of service, for the secret formulas, the company, this corporate office imports those secret formulas from the foreign company, and the taxes are paid under RC. Here, the company prefers to do a cross charge over ISD distribution. Although the company does the cross charge, the manner of distribution under cross charge is in line with Rule 39 of the CGST. See, this is a peculiar practice which some of the industries follows. What they do a cross charge. But while doing a cross charge, they make sure they follow the Rule 39 guidelines and they do the cross charge to the respective unit. The point is why the corporates do like this. Tomorrow, if at all, let us say the circular 199 also it gives a relief. In absence of it, if it is being questioned, this credit is being questioned, I can still say religiously I have complied with Rule 39. So what I intend to distribute is nothing but an ISD credit. So therefore, for all practical purpose, I've complied the rules of Rule 39. They satisfy the Rule 39 by way of cross charge. Is it correct to do that? See, when it comes to valuation, I don't think so. There is no explicit valuation mechanism that is being given. Whether Rule 28 open market value, or should I have to enter into Rule 30 or 31, that challenges are also there. So in light of it, what the company adopts, it adopts Rule 39 manner of distribution. Through cross charge, it does it. Tomorrow, even the ISD question is being raised, whether I have distributed, even though I have not done the distribution through ISD, what I intend to do is to satisfy the Rule 39. So what distribution I have done is an ISD distribution.
Can
Because
it be said that this secret formula is only used in the manufacturing location, which in your study is in Chennai, is I don't know where it is. So distributing it to various branches can be challenged.
It is pertaining to yes, Venuji. The clock is 10:02. I think time is up. With this, I will conclude. Yes, this question shall we carry forward then?
Yes, Ashwinji, we can carry it forward to the next session.
Yeah.
So,
Yes, sir.
particular with the closure of every session, so that everyone can join on time and they can get free for the offer. So, I'm for the vote of thanks for today's session.
First of all, thank you, Ashwin, for stepping up to the plate at such short notice. To inform everybody, there was a slight mix-up regarding the valuation sessions. We couldn't conclude 15-4 today. So it is at the very last moment that I told Ashwin, you need to take a session. So Ashwin was like, you give me any session, I'll be able to do it. So I said, why not ISD and cross-check? So he has within a day managed to capture everyone's attention by bringing into the nuances of section 2021 and what value addition we can all have while we look at the provisions of an ISD in respect to compliance, as well as the possible way in which litigations can be defended. So the points that are already discussed are very interesting. We all need to relook Rule 39 read with Section 20 to have a clearer idea of what Ashwin has tried to convey today. Thank you, Ashwin, for delivering such a great session. We are looking forward to how you conclude it in the next week. And let's see how the Section 2021 along with this practical scenario can be adopted into our daily working life. And thank you all members for joining this Saturday morning. We plan to continue our Saturday morning sessions every Saturday. And even though there would be some sequential jumbling of the sections and the way in which we go forward, we ensure that we have our Saturday morning discussions to keep our GST knowledge alive and be up to date on how the law is evolving. So thank you all members for joining in Saturday. And thank you again, Ashwin, for taking us through the provisions. So see you next Saturday.
Yes, sir. Thank you. Thank you all for this.
Thank you all.
Yeah. Thank you very much.
Thank you. Thank you, sir. Thank you.